Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. Once again, you're out in Chicago this time and you had an international admirer.
I did. Well, we did. I can't just me. I say okay. we did. We did. The show did. This was a lovely Australian gentleman. His name is Noel. And thank you very much for the gifts. It was lovely to chat with you. He also brought all the way from Australia an Australian wine just for Bill O'Neill.
Oh, nice.
So he gave it to Bridget and Jonathan, and that will be delivered to Bill. So anyway, just it's so lovely to meet all of you out on the road. I really, truly enjoy it. Right. And Noel, thank you so much. Just what a charming gentleman. He's made a lot of money with IBD. So here's to all of our friends down under.
That's great. The wine doesn't have to go to Bill, you know.
Yeah, Noel, why was the wine for Bill?
That's right.
Matt and Amy.
Absolutely. All right, so this week we're going to talk about a common and costly mistake that you definitely want to avoid.
We had been stuck in a range, but the market changed tone this week, and it moved decisively higher, and leading stocks have been acting well. So on Tuesday of this week, the market pulse changed from under pressure to market in uptrend. The NASDAQ popped up, and it rose back above the 50-day line, and the move on Tuesday had the feel of a follow-through day, with the index up 2% on heavier volume than the previous day. So now is a good time to be looking for stocks breaking out of price consolidations.
And we did see a number of stocks pop on earnings this week. One was Ulta Beauty. After breaking out in March, it had been trading in this tight range, and then it soared over 11% this week after posting accelerating earnings and sales growth, and showed that the cosmetics retailer was holding its own against Amazon, unlike many other retailers.
Right. Now, New Oriental Education, the online education site, the ticker symbol there is EDU. It broke out of a cup-with-handle base on March the 11th and gradually rose higher until it really popped by gapping up 9% April the 19th on volume that rose 193%. Now, it's now sitting on a gain from the cup-with-handle breakout of about 29% in 55 days.
Veeva Systems was another top-rated stock that jumped this week on earnings. Now, it makes cloud-based CRM software, customer relations management software, like Salesforce.com, but it's specifically tailored to the needs of the biotech, pharmaceutical, and other life sciences firms. And I actually covered this on the IBD stock analysis last Friday as it was clearing a 28.05 buy point. Then this week, it rose over 11% in volume, 171% higher than normal.
Now, NVIDIA is up 39% from its pivot. TransUnion is up 20%, and OLED is up 28% from its buy point. These are all probably in profit-taking zones, or, at least close to it.
Sure.
They should be watched for any weakness that they might exhibit. But these gains do show that the market has favored some growth stocks, and there's been a slight change in tone.
And it certainly is nice to finally see some more solid breakouts that are then followed up by some additional gains. But it's still important to have a plan for when you're going to take at least some profits. We just saw how NVIDIA has been soaring, which may mean it's due for some type of pullback. You can see here how Dycom also popped on earnings and is now around 14% above its buy point. So deciding when to sell is not easy, and it depends on if you have a short-term or a longer-term approach to that particular stock. But the bottom line is have a profit-taking plan that fits your strategy, because without one, it's all too easy to freeze and give back more of your profits than you want.
Now, some stocks that were in the news this week worth mentioning include Apple. And in addition to the recent news that Warren Buffett has a $1 billion stake in Apple, the stock rose this week on positive buzz that there have been strong pre-sales for the new iPhone 7. Now, that's due to be released September 13th. It's going to have 4 speakers and a larger camera. And Apple is now just above that $100 level.
We also want to note that on the May 14th episode, we looked at the monthly charts for the indexes to see where we are in this current bull cycle that began way back in 2009. This week's action may mean the market is ready to roll higher, and if it does, and if leading stocks continue to break out and continue to move higher in volume, you definitely want to take advantage of that. But in the back of your head, in the back of your mind, note that we haven't had a wipe the slate clean type of correction in a long time. So if the market turns sour, be sure to take some protective measures.
Now, budget stores did well. We had Dollar Tree, which zoomed 12% on heavy volume after reporting earnings that rose 25%. And Dollar General was up 4% after it released their quarterly numbers.
Now, we don't have a lot of top-rated stocks that are reporting next week, but two other discount retailers are on deck. That's Ollie's Bargain Outlet and Five Below. And we also have Broadcom setting up in a base, and it's about to report next week.
And never underestimate, Matt, teenagers, especially girls. As you
Sure.
know, you have two girls.
Right.
Five Below is one of those sites that
That's
young girls go to a lot. They have a lot of discounted items. All right, stocks have done well, and they've released some strong earnings reports. So make sure to keep that weekly list up to date of stocks that are ready to report and have an action plan ready for the week.
In the Investors Corner column, we just ran a series on common investing mistakes and, importantly, how to avoid them. So today, we're going to add to that theme by talking about another common and costly theme, and that is to assume you know with certainty which way the market is heading.
That would be a big mistake.
Be nice if you could do it.
If you could do it, yeah, but
Not
you
easy,
can't
not easy.
do it, yeah. And as Matt and I have learned from IBD founder Bill O'Neill, the market can confound even the most seasoned investor. So just when you think things look easy, the market can fall quickly, whether it's a report on the Fed or it could be earnings, other economic news, and the market can take off when you least expect it. So, right before Christmas a few years ago, we had a follow-through day just before
That's
the
right.
holidays.
Right, well, let's go back even further back in time now to March 13th, 2009. We'd been in a sharp bear market for a long time, and many investors, understandably, were in no mood to get back into stocks. Now, even though the NASDAQ had made a good move that week, it had done that same thing essentially multiple times in recent months, only to come right back down. So maybe you're thinking this is another head fake and you're not going to get into this rally, but that's the kind of mistake that you want to avoid.
Yes, absolutely. Now, a lot of sharp investors didn't believe in the new market, the new bull market that began in March. So let's take a look at the NASDAQ. Here's from March 2009 till April 2010. Look at the move. You want to make sure that you do not miss opportunities like that as an investor. So what other key things should you look for in a successful new uptrend? Well, there should be clusters of stocks breaking out of price consolidations with heavy volume, showing that the pros are putting money into the market.
And we should note here too, when you see that happening, you don't just jump in whole hog. You want to test the waters, make sure that it is working, and then get in more aggressively as it proves that it is actually working. Now, one stock that was setting up then was Google, now of course called Alphabet. Keep in mind that after such a severe bear market, the charts for most stocks will be pretty darn ugly. Now, Google had sold off sharply, but it was forming a new base as a new bull market began, as we noted in the big picture. And then the search giant broke out in April. And from there, it made a huge run as the general market also moved higher. So again, while you do want to get back in gradually to make sure that a new uptrend is actually taking hold, you don't want to assume it won't work just on some recent behavior and then sit it out.
Now, Apple was certainly looking strong in March and rose week after week as the new bull market began. But it didn't form an actual base until it formed a nice, tight, flat base, and it broke out in July of 2009. Now, you don't want to miss big moves like Apple's, and that's why you have to put market bias aside and just take a look at what's actually happening in the market.
Now let's take another trip back in time to see the other reason it's dangerous to assume that you know where the market is headed. This is October 2007. The NASDAQ had been rallying for several weeks and it found support and jumped higher on the week ended October 26th, and volume spiked. So maybe you kept your party hat on and threw caution to the wind.
But shortly thereafter, the market plunged and the NASDAQ dove below the 10-week and the 40-week line. So this is a chart of December 2008, and look how dramatically the market changed directions. It was helped along by the financial debacle, and things got ugly.
Now, there were warning signs as the market turned. You had a rising number of distribution days and very likely heavy volume selling in your own stocks. So the point here is don't assume you know which way the market is headed. Closely watch the charts for your own stocks and the indexes and base your decisions on that behavior.
Now, in December 2012, the market may not have looked like it was going to take off, and yet look at the terrific run that happened starting in January 2013. So we always have to remind ourselves to stay nimble and flexible, take a look at what the charts are telling us, and of course the overall indexes to stay in step with what the overall market conditions are.
So keep that in mind for the current market. You could assume that a sharp correction is needed before the market moves substantially higher, but no one knows. We had a very nice week this week. So watch the charts and have a game plan and stay flexible. So before we wrap up, we want to let you know that you can read the other articles in the Investors Corner series on common investing mistakes, and you'll find that at investors.com/investingshow.
Okay, see you next week, everybody.